We got a mixed close from Wall Street on Friday, and you have Asian markets which are largely lower right now.
Sometimes it's last minute, sometimes it's a few days before, but so far we've had scares, but never has the Treasury defaulted.
Decided to go ahead and sell its low voltage motors and geared motors business to a parent entity, that is Siemens AG.
Stocks in focus. The first tick is absolutely flat right now. The sensex, nifty and the mid-cap index are very, very quiet.
I think it will be the profitability which will start improving, but I was not anticipating it will start happening starting this quarter.
We expect increase of about $10 to $15 in coking coal going into Q1.
The near-term activity shock this time is likely to be muted, in our view.
We opened up a bay, we had a gap, or we had a slip from the top, and then once again the markets in the last 1 hour have started climbing higher.
Clean note policy. Therefore, from time to time, Reserve Bank withdraws currency notes of particular series.
The note continues to remain legal tender. It is a means of exchange, and people will have to, or at least banks will have to accept the money.
Nifty at the day's high right now, 78 points higher on the Nifty right now. But a lot of action is what we are seeing in the broader market.
Well, that was the day so far. You're with us here on a fresh new edition of Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Rima and Surbi here in the studios, and Nigel is joining in from the newsroom floor as well. Guys, hi. Good afternoon. It's a good-looking screen. We're starting the day with a 100-odd point gain. Starting the week, actually, with a 100-odd point gain. And, the thing is, it's been remarkably stable right from the word go. So the Nifty, in a way, has been knocking at that 18,300 all day today. There was once a bit of a sell-off, which happened, I think, after 130 or so. And then, we're basically pulling back. We're in the midst of the pullback from the lows that we saw at about, I think, 130, 135 or so. That's the dip I'm talking about. You can see that on the screen. The only thing is, this is very much a Nifty thing which is going on. The enthusiasm is not being seen on the Bank Nifty. The Bank Nifty has been flat. It's been that way since the morning. Market breadth isn't particularly great. Market advance decline is 1:1. And there are equal, if not more, number of stocks which are down massively on large volumes, as there are stocks actually on the upside as well. And we'll talk about some of these individual names in a bit. On the Nifty, just to see what really is leading gains, the entire Adani Group pack is doing well. And Adani Enterprises and Adani Ports both are part of the Nifty. Between them, they're adding about 35 index points to the Nifty. But 65% of the overall Nifty gains are just these four stocks on your screen. Adani Enterprises, Infosys, TCS and ITC. Global screen, the last I checked, was absolutely flat. Asia was higher, but Europe is doing nothing. And US stock futures are, absolutely in the green, but nothing really to write home about. So it's a flattish kind of global screen as well. The question is, can the Nifty continue to charge ahead without help from banks? And I think we'll find out over the next hour and over the next couple of days as well. Otherwise, as we were saying in the morning as well, on last Friday, we got the 20-day moving average got tested, and then we got a very nice, clean 100-point bounce, which set us up nicely for today's session. And that is very much visible on the Nifty. What from here is the question we need to answer and track. Rima.
Hi, just take a look at the Nifty bank contribution. Across the board, private sector banks are under pressure. So the Nifty bank contribution, let's get that up. ICICI Bank, HDFC Bank, Axis Bank, Kotak Mahindra Bank. All these stocks are actually contributing on the way down. But on the flip side, you've got State Bank of India, PNB, on the way up. So there is a clear dichotomy in private sector as well as PSU banking sector. Apart from that, at the index level, it's been a very steady session. The Nifty has moved in just about a 75-point range through the course of the trading session, currently up close to about 100 points. Sectorally, metals up 3%. The Nifty IT index has a gain of more than 2%, and individual constituents of IT, Tech Mahindra, HCL Tech, TCS, Wipro, solid gains coming through over there. The mid-cap earnings reaction this time has been quite stark. So on the way up, you've got a Narayana Hridayalaya, a Muthoot Finance, a BEL. And on the losing side, Siemens once again is making headlines. It was down 4-5% on Friday, but today it's lost another 10%. And this is a stock which had hit its 52-week high just in the month of May, a couple of, like 10 days back. The stock was at a 52-week high, and look at the way it's sold off now.
Yeah, and we haven't heard the last on this one, right? Because this is a deal. I was just discussing this with Vivek on who moves the market. It requires shareholder approval, minority shareholder approval, so whether they'll go ahead and sweeten this or not. But I think the stock market has voted with a thumping clarity on this particular issue. They do not like this transaction, and the stock is off about 13-14% in a span of just 2 days alone. Only to add to the points that Prashant and Rima have already made, the mid-cap market has actually picked up quite well. On Friday, that was the differential. Mid-cap market was getting into a bit of a funk, and we had a negative advance decline ratio, but that index is at the day's high. And yes, the Adani rally is breathtaking. By the way, Adani Enterprises now 18%. Adani Ports also 7%. Power, all of them. Ambuja Cements is up 5.5%. So the Adani rally is breathtaking, no doubt about that. Some of those stocks are up for you on the screen. But beyond that as well, look at Dixon Technologies, look at Balkrishna Industries, a lot of new names as well. And these are large mid-caps. They're not small stocks that we're talking of. Scient, for that matter. Quite a few of the mid-cap names on the buyer's radar today. So, Nigel, I guess barring the bank nifty, which is a statement in itself, right? And that's the problem area for the market. Barring that, I think the bulls will classify this as a pretty good start to the week.
Well, a good session and good start for the week, but it's still going to be in that range. That's what the options data as well is telling you. Look at the 18,200 put, that's seeing a fair bit of open interest build up, and we got expiry that plays out in the next few days. So Friday's low becomes extremely important, and going by the options data also, the 18,130 will become crucial on the downside, going by the premium out there. On the upside, though, 18,300 call, the premiums around 85-90 rupees odd. And there as well, it's unlikely that someone goes ahead and buys that call and hope that, in fact, to make up all of that money, because the smarter hands could be writing that strike, given that 18,400 has been a bit of a problem pocket. So on the upside, that continues to remain a hurdle, 18,400, and then the recent high that we've just seen at around 18,450 odd. So we're still in a range, but good to see some green on the screen. The Nifty Bank, that's not performing. Contrary to some expectations earlier today that maybe that will perform, but that's not been the case. Some weakness creeping in there. So let's see how this goes. But for the time being, the bulls will be pretty happy that we are holding above or closer to around that 18,300 mark, guys.
Okay, got that. Thanks, Nigel, for giving us the levels there that we need to keep on record. Let's get things started then, folks. How should you position yourself in this last hour? Mitesh Thakkar is with us as always. Mitesh, good afternoon. Great to have you as usual. So good day on the index, actually individual stocks as well, barring the bank nifty. What's the advice now, last hour on index and, of course, individual ideas?
Yeah. So I think on the index, we talked about some kind of range bound movement developing, and yesterday, I think, rather on Friday, we indicated that we made an important low closer to 18,050. So we could head towards the upper end of the range. The first target was 18,250, which was met, and then we still have strength. So I think we are possibly now heading towards 18,400, 450 levels. What is worrying me slightly is the lack of participation from the bank nifty. But as of now, it's looking like a very contracting pattern. So as long as it's above 43,500, I'm pretty okay with that. But would prefer the bank nifty start getting past 44,000. I think that should add to momentum, and then you can be aggressively long on the bank nifty as well. So for the timing, trading with some positive bias on the index, looking at 18,450 being tested. If the bank nifty joins the rally, then I think we'll look at a fresh high also in this rally or this swing movement. On the stock side, I have a buy on IOC. That's a buy with a stop below levels of 85 for targets of 91. And IRCTC is the other stock which has given a strong reversal from lower levels. Good price volume action here. So buy with a stop at or just below about levels of 614. Targets of 645 can be looked at.
Okay, all right, Mitesh, thanks very much for that. Those are individual trades. Mitesh also kind of highlighting that point about whether markets can go on without little or no participation from banks. Now, let's shift the focus to pharma space, and lots of stocks are moving. Gland continues to sink. There is Glenmark, there is Divi's, which are moving around on the back of earnings as well. Let's bring in Ekta, who's got a compilation of the most important stuff we need to know from the pharmaceutical space. Ekta, hi.
Hi, thanks for that. Well, I'll start with Gland Pharma. You know, the stock is down today as well. Remember that it's corrected significantly, almost around 70% from its 52-week high. Morgan Stanley has downgraded the stock post its numbers to equal weight with a target price of 1,035. The downgrade is in view of a worsening injectable CDMO industry dynamic, uncertain outcome from customer contracts, distant benefits from strategic initiatives. They've cut the FY24-25 EPS estimates by over 30% respectively as well. Glenmark, the numbers were largely in line. So revenue was up around 11.5%. US sales came in at $104 million versus estimates of $100 million. Margins closed to around 18% which was in line with estimates. But there was a one-time loss on account of settlement or related to a drug Zetia generic. There were remediation costs which were undertaken this quarter. It is expected to taper off going forward. India was down around 6.4% on a year-on-year basis, but that was on account of multiple factors such as the NLEM cost revision as well as COVID-19 base. What probably disappointed the street the most was the gross debt, which was higher on a year-on-year basis. The company, however, has said that they are looking to reduce debt in the next 3 odd years. Remember that the stock has also seen a strong run-up, so that's probably another reason why you're seeing that profit booking come through. Divi's Labs, the Q4 numbers, the revenue was better than estimates. The margins also recovered Q-on-Q, but the margin recovery was lower than what the street had anticipated. But the commentary seemed to be positive. They expect gross margins to recover towards the year end. The company has shown Q-on-Q growth in key segments such as custom synthesis as well as the generic API segment. And the company has said that they have 2 custom synthesis projects which should start generating revenue. Jefferies has upgraded the stock to buy from underperform, and HSBC has upgraded the stock to hold from reduce as well, possibly on the fact that these brokerages do believe that maybe the worst is over.
All right, thanks a lot for that, Ekta. Well, Dilip Bhatt joins us on the show. Hi, Dilip. Good afternoon. Thanks so much for joining in. Well, Ekta ran us through a few of those names from the pharma pack itself. Any of them you like? Divi's, well, the market believes that maybe margin recovery is going to continue from here on. They're talking about higher gross margins by the end of this year, while the other two, that's Gland as well as Glenmark, both of them sulking in trade. Your view on any of these names? Do you like any of them, first of all?
No, not really. Nigel, I think Gland as well as Glenmark have their own unique problems. I think ever since Gland Pharma decided to face the US FDA directly instead of going to somebody else when they were doing the contract manufacturing, I think they have run into a series of problems, and those problems doesn't seem to be getting over, at least in the near future. So I think, and that is getting very adequately reflected in their performance. And their performance, in spite of the, if you see the last 1.5 years, the performance has been decidedly sound, and even this quarterly results has not given any hope or respite. So I think Gland still possibly will be a share better to ignore, despite it may look a little more attractive. I think Glenmark, for all the reasons that we know, that the debt refuses to come down year on year, and if you see the capital employed to top line, that is something which doesn't really make anyone any happy further. So Glenmark is a stock which certainly is not on the radar for us to buy or to invest. And as far as dividend is concerned, I think investors will still wait for Q4 results to come. Though the worst may be over, but I think if they're talking about that by Q4, they will come back to their gross margin. I think people will still prefer to wait because of the very fact that valuations continue to be very high. And in these markets, such high valuations, I don't think is going to attract any fresh look. That's what my belief is. So I think all the 3 stocks, I would prefer not to really look into these companies to invest.
But Dipan, any levels on Gland at which you would think perhaps the worst gets priced in, or it's not about the level anymore, it's about the performance, and you will wait for 1 or 2 quarters of a recovery before dipping your fingers in Gland Pharma?
So I think Gland Pharma, certainly people are looking for a couple of things. Possibly one of them is that there is some recovery which remains sustainable over 2 or 3 quarters, or maybe the slide in the profits is over. Somewhere I think they should get their confidence. And possibly the other trigger could be that could this company be sold off on a strategic basis? maybe that will result in a trigger. But otherwise, I don't think from the current levels, except for these two, I would really be looking at for any further triggers in this particular stock.
Okay, got that. Dilip, stay on. We'll have more questions for you. A lot of sharp reactions, right? We've discussed one on the negative side. So let's look at a positive reaction as well. And Muthoot Finance is definitely one of them. The company came out with what looked like a pretty strong set of numbers for the fourth quarter. The stock has been up 7-8% right from the morning. Abhishek is here with the details of what exactly has worked for Muthoot. So where is the kicker coming in from, Abhishek?
Well, gold loan is shining for Muthoot Finance, especially in Q4 FY23. So overall AUM growth is around 8.9% YOY and about 9.5% sequentially. In that, the gold AUM growth is about 7.6% YOY and about 8.9% sequentially. One of the subsidiary, that is Belstar MFI over there, the gross NPA ratio is down to 2.43% when compared to 7.4% in the previous quarter, which is a decline of nearly 500 basis points. Home Finance, another subsidiary, saw weak AUM growth despite disbursements being strong. Revenue and PAT were weak for Home Finance on a YOY as well as sequential basis, but no taking away from the fact that overall the net interest margin has expanded to 12.26% when compared to 12.21% in the same quarter last year and about 11.86% on a sequential basis. So the net interest income growth was about 7.7% YOY and about 8.7% sequentially. The profits were down 6% YOY and up almost 0.1% sequentially. Investec has written on Muthoot Finance. They have upgraded the rating to hold from sell. They have increased the target price to 1100 from 1000 earlier, and they have also upgraded their EPS estimate for FY24 as well as 25 by 10 to 9% on the back of strong AUM growth that Muthoot Finance has seen. Back to you.
Okay.
All right, Abhishek, thanks very much for that. Muthoot, I mean, when is the last time you've seen such a big positive move on Muthoot? It's been a while because I mean, over the last 4 or 6 quarters, it looked like the company is faltering, actually even longer than that.
Muthoot's gold loan AUM has declined for 4 consecutive quarters in a row. It used to be more than 61,000, came down to 57, then 56,000. And finally, this quarter, we've seen a pickup in the gold loan AUM by 8.9%. So that's where that optimism is stemming. 4 quarters of a gold loan decline in AUM. Quarter.
We spoke with the management this morning. All very positive commentary. All branches are re-energized. His words, not mine, Mr. Muthoot saying.
Do you remember the words last quarter?
No, actually, last quarter was bad. But, 2 times after the last quarter when we interacted, he made it a point to say that competitive intensity is peaking and maybe things are bottoming out. So he told us that. The numbers bear that out. And he's now, of course, put the 15% loan growth guidance for FY24, which is what they used to do. I mean, every year, like clockwork, Muthoot was known for 15%. And they're back there. They're saying, well, this should stay. And the market is rewarding this today. Dilip is still with us. Dilip, afternoon. Muthoot Finance, any thoughts? People have kind of shunned away for a while because it's one segment company, and we've seen what can happen if competitive intensity, other players start to get in, eat their share. But would you look at this at these levels? Your sense?
So I think on the financial parameters, a 15% guidance certainly is very comforting. And as what we have seen, that the gold loan growth has happened finally. But what we have also seen is that all the loans which are consumer-centric, whether it was with the private sector banks or NBFCs, we have seen that they have been able to charge much more in terms of the interest rates, which is really squeezing out the better NIMs for all these banks and for the NBFCs. And I don't think Muthoot Finance was any different. But having said that, I would say that from the current levels, whether it can show 10 to 15% appreciation, I think that's very much on the cards. But I would not be a very keen buyer on this particular stock, where I will still wait for the full recovery to really happen. Being a mid-cap company, I wouldn't really be in a hurry to buy some of these stocks.
All right, Dilip, request you to stay with us. But when we come back, Dilip, I want a couple of stocks from you, which we have not yet discussed, which maybe you could be bullish on. So I'll give you some time to think about that. We'll slip into a short break. You come back, Dilip will still be with us. We'll also be joined by Alpha Manager of the Day, Jitendra Arora of ICICI Prudential Life Insurance.
if you could get your goods to the right place at the right time all the time? With IBM Consulting, AI-powered software can help automate your supply chain so products can be ordered, produced, and delivered more efficiently. What will you create? IBM. Let's create.
Friends, I want to share some good news with all of you. Firstly, like always, we have performed very well this time also.
But what will we get?
Secondly, we shall invest in employee benefit.
Come on, now tell us what will we get?
And thirdly, we shall invest in LIC's group funded plans.
Great, we'll get everything. Now, leave encashment, gratuity, and along with pension, our future is secure.
Yes, employees' real benefit lies in LIC pension and group scheme.
CNG car, there's no chance of storage.
If you get a CNG car, you've got to get a carrier.
CNG is good, but to get something, you have to give up something.
OMG!
It's CNG!
Big boot, big appeal, big reaction. OMG! It's the Altroz iCNG.
Welcome back. Mid-caps are powering through now. There has been a pickup in the mid-cap index, inching towards a 200-point rally over there. But one stock which hasn't had too much luck today is Balaji Amines. Two sets of news. One, the Q4 results, and two, the independent directors and the CFO of the company have stepped down. Sonal is here with the key highlights. Sonal?
Thank you so much for that. Well, first up on the results, it was a weak set, no two ways about it. It was a revenue decline of 40%. Sequentially, also the numbers looked weak. The EBITDA was down 40%, margins at 38%, and profits declined by 58% for the company this time. Now, company said this fall in margin was primarily because of the weakness that they've been seeing in pharma and agrochemical space, something that the company has been saying for quite some time. But the important point was there was an expectation of a recovery in Q4, which did not come through. They said that they anticipate a return to growth and margin levels similar to those achieved before COVID-19. Remember, COVID-19 was a period of heightened realizations because of the way prices moved higher and volumes also coming in higher from the pharma segment. They say they experienced high realizations during COVID, and that is not something they can replicate in the future. The capex that they had planned, that is according to the normalized realizations, and that will not impact the future guidance on revenues as well. They say revenues from the new plans will be coming in and contribute to their top line very soon in FY24 as well. The second set of news is that 5 independent directors have resigned and the CFO has resigned as well. But the independent directors, 4 of them resigned because of a SEBI rule, because any independent director can be on the seat only for 10 years. That is basically 2 consecutive terms of 5 years. Post that, they have to resign, and that is exactly what they did. CFO has been replaced by Mr. Srinivas Reddy, who is also a part of the promoter group. That is what the independent director told us. In terms of management commentary, they said that from Q2 of FY24, they'll start seeing some improvement in margins. And this is something that they're bullish on as well. Pharma and API industry has been undergoing some pressure, which they expect to reverse. And they should see a 5 to 7% growth in volumes in coming months or in FY24. So that is the management commentary, and the stock in focus on the back of that.
We need to step down since the company needs independent directors, and we are no longer independent if we have had a tenure of over 10 years, which is why actually the company not only has identified additional who will take our place, but then we resign at the same time to coincide with that. So it is only a technical issue. There is no other issue on account of which all of us have resigned at the same time.
Okay, so that was one more big talking point with a pretty sharp price reaction on Balaji Amines. Dilip is still with us. Dilip, what do you think? I mean, I guess it was just a little bit of a crazy coincidence that the term of so many independent directors was coming to an end at the same time, caused a lot of confusion. The stock is still down, though. I mean, there's also the earnings performance that we have to look at. Your thoughts?
Well, I'm not really actively tracking this, but from whatever little I know about it is that this stock certainly is not very cheap. without any doubt. And I think they've had really some very good time in the last couple of years. But hence, I think going forward, I still feel that maybe the pressure on the margins, not for just this company, but for other companies catering to the APIs of the agri sector, will certainly remain under pressure. So I would say that apart from whatever developments from the corporate front that has happened, I would say that Balaji levels still will not look attractive even from the current level. One should wait and watch, not that I'm very actively tracking this company.
Okay. Speaking of sharp reactions on corporate developments, Dilip, didn't get your take on Siemens, I think. I mean, this has been a big talking point, right? Rarely do we discuss an MNC doing a transaction that the market is not happy with, but the market has voted very, very clearly over here. And I think that that valuation of 2,200 crores is something that people are not willing to digest. Your thoughts?
Sure. I think some of these things have come up in the past also with Siemens. It is not that for the first time that this thing has happened. And certainly, as what you very rightly said, that their sale of this particular division is not taken very well. And I think this is also, without any doubt, is going to impact. Though they have been telling that the sales from this division is maybe high single digit at best in terms of the growth numbers. But having said that, I don't think that selling this particular division for Siemens, considering that on an overall context basis, makes sense. Otherwise, Siemens, I think, really holds out a good promise in terms of an overall growth that we were talking about. But we'll have to take a relook as to what's going to happen now after this sell-off. And obviously, this is not certainly something which investors are liking. And maybe I think I would, if I have it, I will just hold on to it. I will not be in a hurry to buy it at the current level, nor will I be in a hurry to sell this. I will just hold on for the time being.
Okay, all right. Dilip, I can't let you go without asking you for that 1 or 2 picks, whatever you want to be, however generous you want to be with us. A couple of stocks that we haven't discussed till now that actually you're bullish on, and maybe you could have advised you or you could have advised a couple of people to buy it.
So I think IOL chemicals and pharmaceuticals looks pretty interesting. We did hear the management commentary. I think that's a stock which possibly has a good potential. I think we can see a very strong couple of quarters. But I think whether this is going to be sustainable beyond 24 is something that we are not very sure. But still, I think looking at the valuations and looking at the expected profitability based on the Q4 results, I think the numbers are going to be pretty good and pretty strong cash flows as what we can see for IOL. That is a stock. And then the company is the Radiant Cash Management. I think that's a stock which has not gone anywhere after it's listed. Still quoting at around 9 to 10 times. What is more important is they have a very high ROE of around 25%. And we continue to see a 20% growth in the bottom line for the company. Though cash management system as a business does not enjoy a very high perception in terms of the PE rating, but we feel that this particular sector has a tremendous growth potential, and there are only 2 companies, CMS and Radiant Cash Management. So I think looking at high ROAs, good dividend payout, and continued growth of 15-20%, I think this stock holds out a good promise for a good rise.
All right, we'll leave it there. Thank you very much, Dilip. Appreciate you joining in. IOL Chemicals is Dilip's pick. So do your diligence and we sort of, research the idea which Dilip is generously shared. Thanks very much, Dilip. Appreciate it. 110 points higher is what we have on the Nifty. 18,315 is where we are at. So that 100 points still very much there. Jitendra Arora is now joining us. He's Executive Vice President and Fund Manager, Equity at ICICI Prudential Life Insurance. Jiten, good afternoon. Great to have you with us here. Thank you very much for your time. So I just want to start by asking you, where are you, what are you more sort of comfortable and what do you like more? Do you like things on the consumption side or do you like things more on the investment side? Let's just begin there as a construct and then we can drill it down.
Sure. Just to, before going towards why the consumption or towards the investment, I would just want to break down the market, how it is poised. We believe that we are in a phase of market where it's going to be a tricky next 6 to 12 months, where we will see markets probably more on the sidelines rather than seeing a sharp up move or down move. And there are a variety of factors that will influence that. So in that backdrop, and taking into account how the things are likely to move, at this point in time, if you ask me, I'll be marginally poised in the favor of consumption stocks from a 12-month perspective rather than the investment stocks. And the reason is fairly simple, that we have seen a slowing down market impact on some of these names that's getting priced in. We have gotten some kind of time correction or price correction on them. And as a result, we believe the valuation of some of these consumption stocks, which can be compounders over a longer period of time, have corrected over the last 12 to 18 months. Whereas if we see the investment-related names, given the bullishness on resumption of capex cycle, we are seeing that some of these names are quoting at lifetime high multiples and valuations and are pricing in very aggressive earnings expansion over the next 12 to 24 months. So that's the factor which drives us more towards consumption names at this point in time rather than investment names.
So investment names are a complete avoid for you, or are you looking to sell down your exposure to make space for consumption? Because if the headline is not going to be going anywhere, the alpha you will generate is by picking the right stocks. So could you help us, what do we do if you hold an L&T, you hold the ABBs and Siemens in the world? Will you pare down your exposure? Would you go a little underweight on banks, for instance, to make space for these stocks which you believe will outperform?
No, so before to correct there, so it's not that I'm recommending to sell down banks. In fact, private sector banks still remains one of my preferred sectors to play the Indian market over the next 12 to 24 months per se. Having said that, between consumption and investment, it's not that we don't hold investment names. Within investments, one can be specific and look at stocks where you have the valuations are still reasonable and perhaps stocks are not pricing in too much of earnings growth over the next 12 to 24 months, and you can stay overweight those names to play the cycle for next 12 to 24 months. But there are certain stocks which are already quoting at very high valuations. Those are the names where we will pare down and make space for some of these consumption names which we would like to accumulate over the next 3 to 6 months.
Okay, I got that, Jitendra. So you're looking to accumulate some consumption bets over the next few months. Tell us a little more about the portfolios as they're poised. Beyond, let's say, financials, what would be your biggest overweights at this juncture?
So some of the consumption themes we are overweight. For instance, something like a QSR space, we like that space. Similarly, hospitals is one space which we like. They have been steady compounders for us and they have delivered for us over the last 12 to 24 months, and we continue to expect them to deliver over the next few quarters as well.
Okay, all right. Hi, Jitendra. Good afternoon. Jitendra, looking at a couple of these mid-cap IT stocks, Emphasis as we speak, that one spiked to the high point of the day. What's your view on IT? Clearly, there are still some global headwinds, and maybe the worst is yet to come because recession has not really hit, and yet we are seeing these pullbacks, lower growth, but margins could improve. How would you approach the space, and between large and mid-caps, what's the take?
So at this point in time, my preferred, if within IT I have to choose, I'll prefer large cap versus the mid cap. However, if you ask us, we as a house are still underweight IT per se. And I think you hit the nail on the head when you said that the growth may slow down further. That's what our hypothesis is at this point in time. And even though margins may look to improve, but there also we can see that there may be some kind of headwinds which may come because of the lack of growth, and also because of some kind of pricing cut which the companies may have to deliver to their clients in order to get more business.
Jiten, so QSR, hospitals, what else? Any other sectors from the consumption space?
Banks per se, we like. Okay. They're also a proxy on the consumption per se. I would gradually start moving into NBFCs a little bit, because I believe that we are close to the peak of the rate cycles. And as the rates start going down, let's say 6 to 9 months from this point in time onwards, they will be beneficiary on their cost of funds and should see their earnings growing here at a good pace. So I will be selectively buying into good NBFCs at this point in time.
In hospitals, is there any preference between the metro city hospitals like say Max or some of the more regional plays like Krishna Institute of Medical Sciences, which is present in Telangana? Is there any bifurcation that you're making when it comes to hospitals? What are the metrics that you're looking at to pick the winner?
There, we have a portfolio approach at this point in time. So if you see, we have regional plays as well as some of the metro plays as well. I think hospitals as a space, given that the under-penetration of quality health infrastructure in the country, I think that's one space where we can see secular growth for a longer period of time. And as long as you're picking a company which is investing its capital at right price and at the right place, we should see that those stocks should deliver. And so far, most of the listed plays there have delivered. We can see that.
Okay, got that. So, Jitendra, sort of to sum things up, what is your overall stance? Would you be fully deployed at this point in time, or looking at the markets, the fact that we're close to all-time highs, we do have some uncertainties in the international arena. Would you prefer to keep some cash on the sidelines and look at gradual deployment, or are you expecting really, better levels ahead as we close out the second half of the year?
So there, our philosophy plays a big role. As a house, we do not keep a very high level of cash. We believe that our investors have given us the money to deploy into equity markets. We can choose stocks where we want to deploy it, but we don't keep cash at very high levels at this point in time. Having said that, what I can also see that domestic mutual funds today, for instance, are maintaining cash levels which are perhaps highest over last 24 months. So almost in excess of 4% on an aggregate basis. So that perhaps is saying something about domestic's comfort at the current level.
Cash levels held by domestic mutual funds at a 2-year high. Thank you very much, Jitendra, for joining in. Look forward to our next conversation. Get into a break. We'll come back and tell you a few stocks that you can buy today to sell tomorrow. Calls from our technical experts.
It's okay for us to nod for everything, because we are parrots. Yes. But your wealth manager? Shouldn't be doing that. You know?
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
It's time to break free. Break away from the routine to the greens and get lost in the world within. To steer through, to stop. Start again. Go forth and just let it all go. With JK Tyre's Ranger 80 for the ones who are wild at heart. JK Tyre, total control.
Welcome back. Well, a rather good session actually from the bullish perspective. Markets moving up. Divi's Laboratory, that has to be the star of the day, right? One would say valuation-wise still not cheap, year-on-year compression. But the street is saying, no, there is hope out there, and that's one of the biggest gainers. Even the last few minutes, I think Apollo Hospitals as well, there's a bit of a spike up on that stock as well. I think the reason that we have just moved these last 10-15 points is because of TCS. That one's moved higher. And I think HDFC Bank has cut its losses as well. So both those two heavyweights should come up for you on the screen. Mitesh Thakkar is back with us. Mitesh, well, it's a good trading session, right, from the bulls. Do you think we've got more in store? Can we go past the series high of around 18,450 odd? And what about your individual stock picks?
So, I'm certainly looking at a retest of that. getting past that answer, I think I'm still waiting for the bank nifty to break above 44,150. If that happens, then definitely we are getting past the series high and then making a new swing high at least. So we'll wait and watch for there, but the overall stance is positive. I have a BTST on LTIM with a stop at about 49.70 for targets of 50.40. And LTTS as well is on the list. That's a BTST with a stop just below 3900, 39.65 as the target area.
Thank you very much for that. Let's drill it down then to the big numbers to watch. Shree Cement will be reporting numbers. Nigel, what's the expectation?
Well, for Shree Cement, we look at the standalone numbers because we look at only the India operations. What happens with the Middle East operations, well, that's anyone's guess. So going by the standalone numbers itself on the top line, we're expecting a growth of close to around 12%, though the EBITDA number will be mildly higher with it coming up only around 2%. The good news is on a sequential basis, you'll see a good improvement. We should have margins back at around 20%, or from around that 17.5%, which was a bit of a struggle in the past quarter. But on a year-on-year basis, it will still be lower. What are the factors that contribute to this 12% growth? Well, almost the entire of it will come in from higher sales volumes. Remember, they have capacity expansion that's coming on stream. Their market share in North India has improved, and their exposure to East India as well has, will hold them in good stead. So that's why the top line growth will almost entirely be driven by higher volumes. Realization should be more or less stable on a quarter-on-quarter as well as on a year-on-year basis. Now, margins will recover. That's because of operating leverage and, and energy costs as well lower. Remember, they use a fair bit of pet coke, and pet coke prices are lower. So that's what will give a bit of a fillip out there. The profit number, though, that's going to see a sharp compression because depreciation costs will be higher as they've commissioned various units. The commentary from the management will be very, very important, both on demand, pricing, as well as do they have any inorganic plans in store. That's going to be something this street will look forward to.
Okay, got that. That is Shree Cement. Well, with that, let's move on to yet another story. BPCL will be, of course, reporting its numbers today. So we have the expectations with Sonal. Sonal, so what can we look out for?
It's expected to be a good quarter, and like HPCL and IOCL, there's an expectation there could be a beat to the poll as well. But the numbers look good. While revenues will decline by 9%, it'll be an operational beat, but EBITDA is expected to grow by 95%, leading to a margin increase of around 400 basis points. And profits are also expected to grow by 103% to come in at 3,981 crore rupees. It will again be led by the marketing segment. According to the poll, the auto fuel marketing margins will increase on a quarter-on-quarter basis. GRMs too will see an increase. So this time around, it's expected at $12.5 per barrel. Now remember, for HPCL and IOCL, the bigger beat came actually from the refining segment. So we'll watch out for those numbers as well. The crude throughput is expected to grow by 1% on a sequential basis, and fuel over recoveries are expected at around 2,040 crore rupees. This compares with 3,200 crores of under recoveries that were seen in third quarter. So that is one of the reasons why reported numbers will also look better than the last quarter. Inventory loss expected by around 1,200 crore rupees because crude prices they fell. But of course, that is something which will aid refining margins on the core basis as well. So that is something we are expecting good set of numbers from BPCL this time around.
All right, thanks very much, Sonal, for that. That's BPCL, IOC, HP, of course, reporting, as Sonal said, good numbers. Cochin Shipyard, we were discussing, what's happened to Siemens and a bunch of other stocks, but Cochin is the other one which is in focus. It's down sharply. It's been down sharply since the morning. Reported a weak set of fourth quarter earnings. Let's actually recap the numbers and what went wrong with Vivek, who's standing by. Vivek, take it away.
Well, absolutely. So what's actually happened is that the changing composition of the order book, and also given the lumpy nature of the orders that, companies like Cochin Shipyard actually get, which is what has led to a weak, it's a top-down whiffs as well as an operationally weak quarter. First, let's have a look at the numbers before going into the reasons. Revenue is down 50% on a year-on-year basis as far as Q4 is concerned. When you're talking about profitability, coming in at 39 crore, aided by one-off, it's an operational loss figure for the company. Segmental revenues, shipbuilding revenues have come in at 436 versus almost 960 crore last time around. And when you're talking about the ship repair revenues, again, very weak, 140 versus 252 crore last time around. We actually spoke to a couple of analysts to understand the nature of the order book and what exactly has transpired in the quarter gone by. So the impact of the end of one particular order, which is the indigenous aircraft carrier that the company was supplying, has actually led to a significant loss as far as the order book positioning is concerned, Also, along with that, weak execution trends is also something that is weighed in as far as the Q4 operating performance is concerned. Now, going forward, what is important to track? Number one, changes in the order composition as critical projects of the company are now nearing an end. And number two, when does IAC-2, that is the Indigenous Aircraft Carrier 2, when do these orders start coming in? So that's going to be very important to track as far as Cochin is concerned.
Okay, thank you very much for that. We will slip into a very short break. Okay, before that, we've got Anand Tandon waiting by to chat with us. Anand, thank you very much for joining in. The first question is actually on Siemens. After the kind of fall that we've seen over the last 2 days, is the stock attractive according to you? And if not at current levels, at what point? What will make you look at the stock now?
Well, there are two ways of looking at it. Is the business attractive? Absolutely. Siemens is in a segment which is at the moment in a sweet spot, and it has the technology and the backing to be able to take advantage of it. However, given what they keep doing, which is to sell profitable businesses to their parents at a deep discount, from a corporate governance level, I would rate them very, very poorly. And from that point of view, if you really are looking for good corporate governance as a criteria for investing, I would think you want to stay away from these companies.
All right. Hi, Anand. Good afternoon. Anand, I want to ask you about Ramco Cements. But before that, just pull up Salzar Electronics. The intraday chart actually should come up for you. Not a very, very large name in there, but Salzar Electronics, as I look at that, suddenly that stock has moved to lower circuit. It's down closer around 10% as we speak. It's only a 500 crore market cap, but it seems a couple of accidents taking place from the broader markets as well as we speak. The stock should come up for you now at around 295 rupees odd. But Anand, that's a smaller cap company, so we will not ask you about that. What about Ramco Cements? Good set of numbers, volumes, the tone is bullish as well. What's your view on it?
Well, I think overall, from a cement perspective, I remain somewhat circumspect despite whatever everybody else says. The reality is that the cement capacity keeps increasing more than the demand does. At some stage, that will stop perhaps, but I would imagine that what you're hoping for is that there will be a rapid increase in demand. It's not specific to Ramco. But overall, I think most of the cement companies are fairly aggressively priced, and the kind of return that you're likely to make from them is not, not very dramatic.
Okay, I think we lost the line there with Anand. We'll just reconnect and come back to him. The market, by the way, is up 110 points, so we're at 18,313. And things are looking pretty solid overall. On the Nifty, I must specify, market breadth is slightly in the negative. We've got about 1,200 stocks lower and about 1,150 stocks which are higher. Banks are showing very little enthusiasm, but one group which is showing all the enthusiasm is the Adani Group stocks, right? I think this is perhaps the single best day for the Adani Group stocks since the Hindenburg report came out. So you look at stocks like Adani Total, 5%, ACC 5%, Ambuja 5%, Adani Ports is up 6%, Adani Power is up 5%, Green is up 5%, Enterprises is up 18-19%, Transmission is up 5%. So, so many names at their daily upper limits from that particular group, and that is one area, that is one group of stocks which are doing very, very well. Anand should be with us when we come back. Let's take that quick commercial break. Let's also listen into some market commentary. This is Vineet Sambre of DSP Investment Managers. We spoke with him on the market, his top sectoral bets. Listen in, we're back.
Across segments like consumers, automobiles, cement, all of these segments, they have benefited because of the lowering of the input prices. And that has benefited the profitability. And I think this is an important matrix which is likely to play out over the next maybe 2 or 3 quarters. And I think which is what I believe is likely to keep the earnings momentum maybe okay to slightly positive. So I think overall, I would say that earnings have been slightly better than my anticipation. The one part of the segment, which is the investments, engineering, capital goods, I think that continues its strong momentum. I think the markets may be reasonably priced in terms of valuations, but we should, I think what we are also trying to sort of keep in mind is that we will have some of these macro news flows, which are going to keep the overall upmove in check as well. Whereas, as I anticipate the earnings momentum to start accelerating gradually over the next 1 or 2 quarters, will also mean that you don't see a lot of downside when it comes to India, specific earnings factor. So I would say that all in all, I believe that while valuations are reasonable, all these volatility, the global volatility around recession and all may likely keep some of these upsides under check. We are, having decent exposure into the pharmaceutical and healthcare businesses. We still believe that the earnings cycle for the pharmaceutical companies largely will play out like it is happening now in case of, as I mentioned, consumers, cement, automobile. I think the same story is likely to play out in case of pharmaceutical, wherein they have got impacted because of the higher raw material prices. And those also, there are definite signals that they are also cooling off. As far as the other part of the healthcare is concerned, the hospitals, diagnostic labs, they are maybe slightly on the expensive side. Maybe at right valuations, it could be prudent to look at those as well, given the long-term outlook in those names.
कर लेता हूँ।
पैसों की कमी से अपॉर्चुनिटी मिस हो गई? किराना तो नहीं, पर स्टॉक्स पे बाय नाउ एंड पे लेटर विद ICICI Direct MTF. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
My dad has won a medal for bravery. He's a major in the army. He protects everyone. Karan, what does your dad do?
Rohan, your daddy.
Karan, tell us now.
He's an LIC agent.
That's great. Imagine what if something untoward happens?
So?
Well, Karan's dad provides proper guidance to protect our family's future.
We are proud of our million-plus agents who continue to protect countless lives. We welcome you to LIC. Visit your nearest LIC branch.
एक ऐसी धरती जिसकी सुंदरता की कोई सीमा नहीं, कला, संस्कृति और ऐतिहासिक धरोहर का एक संगम स्थल प्रशंसकों को एक जादुई क्षेत्र में ले जाता है। जम्मू कश्मीर में एक नए युग की शुरुआत।
हमें मिलकर जम्मू कश्मीर को नई ऊंचाई पर ले जाना है।
श्रीनगर G20 प्रतिनिधि मंडल को जम्मू और कश्मीर की सुंदरता और मेहमान नवाजी का अनुभव करने के लिए स्वागत करता है।
Double the joy with Canara Bank. Canara Home Loan and Canara Car Loan. 100% waiver on documentation charges and concession in processing charges. You deserve the best. Canara Bank. Together we can.
Okay, welcome back. Just 8 minutes to go for market closing. We are 98 points higher on the Nifty. Anand Tandon is still with us. Anand, before we took that break, I was just highlighting how the entire Adani Group's pack is doing very, very well. Any thoughts? I mean, if you've looked at all the news flow around it, there was the Supreme Court appointed committee and the report that they put out on Friday. Actually, even in the last hour, second half of Friday, stocks did well, not this well. And today they've taken off. Any thoughts?
Well, really, there are two things that you need to look at in Adani. One is there any major wrongdoing? And so far, we haven't seen anything that the regulators want to point fingers at. And if that is the case, then, that takes that off the table no matter what anybody thinks. The other question is whether or not there are real assets backing it. And I think there should be no doubt that there are real assets backing most of the companies. Now, within that, there is a valuation call to be taken. In my view, the only business that really makes sense in that whole group, which is available at a reasonable valuation, is the ports business. Most of the other businesses have gone to stratospheric levels, and many of them still continue to do so. So if you are looking at getting back into that company, that would probably be the best bet to take. It's a huge asset. It is doing extremely well. And the plans that the company rolls out is also fairly aggressive. The one major advantage that has happened after this, the news about the Heidelberg's report has been the fact that they have stopped expanding, and that to me is great news for the shareholders because they were going at a berserk rate by leveraging themselves. Currently, the emphasis is on deleveraging, and I think that will actually make the group stronger and better going forward.
Anand, off late, can you tell us how you're, positioning on your portfolio? Which are the stocks that you've purchased? Which are the stocks that you're uncomfortable holding at current levels?
Unfortunately, the market is moving at a rate that it becomes difficult to keep trading. So I was obviously overweight in terms of capital goods and and the banking sector, etc., as would be most people. And that has done exceedingly well. The question is what from here, and therefore you become a little more, it becomes a little more challenging. The one sector that has underperformed clearly has been the IT sector, and I think you're beginning to see some upside coming from there. Only, in my view, more a sector rotation than actually any great numbers expected. But it's just that they are now relatively again looking somewhat cheap. To my mind, some of the capital goods companies have run their course in terms of the valuation. They will no doubt continue to report great numbers going forward, but it looks to me that they are already paying for all that and then some more. Banking will probably continue to do reasonably well, though again I would imagine from a margin perspective you've probably peaked out, but that doesn't mean that the numbers will not grow from here. So that still remains somewhat of a comfort space. I think energy is one area that I would watch at carefully. I was mentioning that the last time I was on your show. Gas especially is looking something which is quite exciting. Second half of the year could pull up some surprises there.
All right. Anand, what about this theme that we have playing out? Amber Enterprises came out with a very good set of numbers. Though the management told us earlier today that first quarter will be a little bit soft because of inventory levels being higher, unseasonal rains as well. You have Dixon, they're ahead of its numbers. The street believes some positive read-through. And the other recently listed one is Keynes. Keynes Technology is up close to 10%. I think it's 11% now higher. Any view on this space or any of these three stocks that you like?
So companies like Amber, the only problem I have is that they play at very narrow margins. If you look at what they will be making, it will be about 4 or 5%. And that's the kind of number which in Indian context I'm rather uncomfortable with. There is no question that there is a huge tailwind there, especially given the PMI kind of program, the PLI kind of program that the central government is funding. And therefore, the question of you are on a treadmill. You have to continue to grow to get the benefits from those incentives, and therefore you will have to keep pushing. The challenge will be, in my view, the ability to manage the margins and to get the receivables in time. And India is not that conscious about those kind of things, so I'm a little cautious about that. Otherwise, this is definitely a sector which will show rapid growth.
Many thoughts on Muthoot Finance, Anand?
Well, I mean, the gold loan business is something which is which will likely do well, but I would rather buy jewelers themselves, rather than look at some of the other ways of funding it. Otherwise, on an NBFC per se, the major problem that was there was the liability side. That seems to have somewhat got sorted out because we are now looking at interest rates having kind of, as I said, may not be moving up too much from here, and liquidity still remains abundant. So from that perspective, NBFC is certainly something that will likely come back in favor for the near term. But I think the kind of unsecured deposits other than gold, which most of the NBFCs end up doing, is not something that I find very comfortable. I would stick with the banks, especially the private sector frontline banks.
Okay, and jewelers themselves, Titan. Perhaps. Anand, great to have you with us. Thanks very much. Appreciate you joining in and running us through your views on the market. Well, we're going to end up 100 plus points in the green. So 18,310 is where we will kind of make our stand at 3:30 today. The high, by the way, on the index is 18,335. So not very far away from the day's high as well. Some 20-25 points off it. Banks did not participate. So that's, actually, if anything, the Bank Nifty was down 100 points. That's about 1/3% lower. And broader markets was also mixed. It was more losers as compared to gainers. So that's a peculiar kind of situation. But, the Nifty did well and everything else kind of just stayed on the sidelines for the bulk of the day today. Rima.
Well, let's talk about individual winners and losers then. Adani Enterprises, 20% up move on that. Look at the kind of up move we've seen. Adani Ports is up 6.5%. And even across the board, other Adani Group names are all flying around in trade. Apart from that, you have strength in commodity names. The Nifty Metal Index itself was up close to about 2.25%, with names like JSW Steel, Hindalco moving up. IT had a good session. Tech Mahindra, Wipro, HCL Tech, TCS all up more than 2%. Divi's Laboratory has had a smart 5% gain after the margins improved on a quarter-on-quarter basis. On the losing side, private sector financials have seen some correction. Axis Bank, ICICI Bank down more than 0.5%. Nestle is your top Nifty loser. The cut isn't deep, but it's down close to about 1%. Two-wheeler names, Hero MotoCorp, Eicher Motors struggled a bit in trade. Hero MotoCorp down close to about 0.9%. But the story is not really at the index level, because it turned out to be a fairly steady session. But individual names in the mid-cap space, Surbhi.
Oh, absolutely. And it tells you that, the sentiment is back on the green side of the screen. So beyond some of the major Adani movers, for instance, that Rima alluded to, look at the other names as well. Look at Amastec, 5.5% up. Some of the railway names like Aircon, back on the move. Ujjivan Small Finance Bank, Poonawalla Finance, interesting gains on a bunch of these stocks. It's a long list. Balkrishna Industries, Dixon, Keynes Technologies, Sirma, SGS stock we were just discussing. So quite a few of these names on the upside of the screen. The mid-cap indexes are ended at the day's high with a bang. And it has, in fact, trumped the Nifty in terms of the percentage gain for the day as well. So all in all, looks like a pretty good solid close with 18,303 on the board at the end of Monday.
Well, you just wanted to say, right? We've conquered 18,300 by the close of trade. But yes, the bell has gone. The trading day has ended. But don't go anywhere, because on the other side is a very special offering. The explainer on the 20% TCS, which will be collected on all overseas transaction, but up to 7 lakh. Everything that you need to know about this will be coming up in our special Newsmaker with Surbhi.